Hello. Hi, welcome to Traders Talk. And today is again Tuesday. Time passes so fast. Okay, for those who have just joined us, welcome. And let's just check some technicals. All right. Okay. Okay. So good. Okay. Hi. This is Ming Hon here, and if this is the first time joining us, this is a show where we will talk about the stock market and also trading. Trading. Yeah. So for those people who love to generate income through the stock market to learn how to trade, so this is the show for you. And for those returning viewers, yeah, please do share and like this video so more people would have an opportunity to actually see this. All right. So today we are going to talk a bit about feng shui. Okay, all right. So the next, as you guys know, next week, next Tuesday is actually the start of the Lunar New Year, and this year is actually the year of the tiger, the year of the tiger. So for those who are born in the year of the tiger, then this is your year. Okay, and of course, for those who are not born in the year of the tiger, of course, there are also another, how many animals? 11, I think. 11 more animals, right? In the Chinese zodiac sign. So some I have actually seen that some would be auspicious in certain areas. Some would be not so auspicious in other areas. Yeah. For example, some people might be better in financials, and then some people might be better in relationship. Maybe they get a new girlfriend, or maybe they get married. Yeah. They find their love of their life. And then of course some would have better health. And yeah, so this is actually what Chinese believe, right? um, we always talk about auspicious things, and if they are not so auspicious stuff, right? Not so auspicious stuff, not so good stuff. Then of course we also want to find a way to actually get rid of them. Perhaps place an ornament or a jade in your working area, or perhaps place what is that? Hack down your wall. Hack down your wall in your living room. Perhaps the feng shui master say that, okay, this wall is not good for you this year, so you need to remove it. And next year they'll come and tell you that the you need to actually put on this wall to protect you from bad feng shui. Okay, and this is the contractor number which you should call. Actually, actually, the feng shui master also set up another what is that, construction company, right? Renovation company. So he worked himself to actually give more business to himself. Okay, so don't get those type of feng shui master to actually help you, right? Okay, just get the proper ones. Yeah, so this is just the joke of the day. Okay, all right. So today we are going to actually talk about the year of the tiger, mainly 2022, whether it is actually good or bad for the stock market. And we're going to actually also cover um, some of the ways for you to actually find opportunities in the market, and also ways to actually also how to say, avoid making losses, and actually find ways to actually help you, potentially help you make more money in the stock market. Yeah, so good or bad for stock market, it is actually yet to see. Of course, if you have followed the market for the past 3 weeks, it is actually a very bloody bloody three weeks. Yeah. And of course, for those people who are already in the stock market, you may feel a bit of pain. You may feel a bit of pain because your portfolio might be in the rates, because the market has actually gone down by more than 10% for the S&P 500, whereas the Nasdaq, the tech sector market Nasdaq, it has actually dropped even more. Yeah. And for the past week, last week, we actually also spoke about the intraday volatility, where the market was actually moving within the same day, right? More than 1% going down, and then later in the day, it actually recovered back the 1% down, which they actually which actually happened during the day. Yeah. And of course, this week, the market actually step up the volatility. This week, the market actually step up the volatility. We are not talking about 1 to 2% kind of thing, you see. We are no longer talking about 1 to 2%, but close to 5%, close to 5% intraday movement, close to 5% intraday movement. Because if you have actually been in the market yesterday itself, right? Yesterday itself, it would really scare the H out of you. So I have to use some a bit vulgar, because actually the market is also very vulgar nowadays. Vulgar. What I mean vulgar is that they don't give face. They can actually show you a very angry face in at the start of the trading day, and then while you go to sleep, the happy face come out. The happy face come out while you go to sleep, you see. So before the market ends, right, you see the whole market is actually in red. Like yesterday, the market actually before I went to sleep, the market actually fell about 90 over points before I went to sleep. Then of course, when I actually saw everything red, right, when I actually saw everything red, I was not that happy. I was not that happy. Let me show you just what happened yesterday. Let's see. This one I changed it to 5 minutes. Okay, just let me show you what happened yesterday. This is 22nd, 24th. This 24th. Okay. So actually, last Friday, right? Last Friday we closed the market at around 4397. Okay, and yesterday the market opened gapping down from this level of about 4397. It gapped down on opening maybe around 4321. Yeah, 4321. So on opening, it showed a very not so nice angry face, red face. It gapped down about 1.69%. Yeah, on opening, gapped down 1.69% already, 74 points down. Okay, so of course, this is after an hour. So this is about after 1 hour of trading. After 1 hour, it actually went down all the way to about 128 points. Yeah, and then it went up again. So that's why I said when I slept, it about somewhere about 11 plus before 12 lah. Yeah, so it went down about 90, 94, 95 points. Yeah, you can actually see there it went down about 2%. So I saw the portfolio very bloody. Nothing to do, right? Nothing for me to do. No trades to actually enter. Yeah, because the market is already so down. And I placed a few trades on the system, and just waited for it to fill, and I went to sleep. Okay, so then of course during the night, actually I woke up. I don't know what time I woke up in the middle of the night. Maybe about 2:30 a.m. I remember. Yeah, I saw the time on my handphone, 2:30 a.m. I just looked at the Yahoo what is that? The Yahoo app on the mobile phone, right? Okay, that's where I actually put all my watch list there, and then I just open it, and then I just scrolled down. and I still see everything red. This 11, 12, 1, 2. Yeah. So I still saw everything red. So this is actually about 2 a.m. Yeah, 2 a.m. here, somewhere around here. 10:30, 11, 12, 1, 2. Okay, somewhere around here, 2 a.m. So I did not see how what was the S&P 500 then. I did not see, but I only scrolled down to see, just looking at the color, seeing whether the market is still angry with a red face or whether it is actually happy with a green face. Okay, when I scroll down, I saw most of the stocks on my watch list, which are the stocks I either invest or I trade, all in red. Okay, except a few lah. The one which I could recall was actually Adobe. Okay, Adobe was up about $8. I saw. Okay, good thing, because I have a position in Adobe, and when the market is all down and Adobe is up, only Adobe, only Adobe is actually up. So I said, okay, at least I have one happy face. The rest is all red face. It doesn't matter. So I continued to sleep. And of course, after that, when I actually woke up again, I opened the app, the Yahoo app. I opened it and I saw S&P up 12 points. 12 points. Yeah, I think yesterday it was actually up 12 points. Yeah. So S&P 500 up 12 points. Then I said, when I went to sleep, it was down. 94 points. And then later at 2 a.m. it was still down. I did not know how down it was until later. I checked back the market that the down was actually about here about 171 points. So the market actually firstly gap down by 70 over points, and then continued to drop down by another 100 points to from last Friday close to drop by 170 points, which is about 4%. Okay, and then of course what happened after that is that after 2:30 a.m. Somewhere there, it actually turned happy face, and it rallied up all the way, even surpassing by 12 points above Friday's close. Okay, so that means it has actually gone up by about 4.6%, 190 over points. Yeah. So the market went down at one time 4%, and then later it decided it wanted to be happy. It went up about close to 200 points, close to 5%. And all this happened in one day. Last week, we were talking between 1 to 2% intraday movement. Today, we are talking 4% intraday movement. 4% intraday movement. Yeah. So the market is actually very unpredictable. And of course, this can also cause a lot of problems or troubles if you are actually trading directionally. Yeah. So that's why since last week and the start of this week, I mean, I have actually reduced a lot of my trading positions because of the market uncertainty. Yep, reduced a lot of. That means I have not entered a lot of new positions lah. I mean, as compared to the normal trading volume, I have actually reduced it. And of course, if you have actually followed us in the second show of the year, if not mistaken, we have actually said that, okay, during volatile times like this, if you are actually trading, one of the things which you can actually do to minimize the risk on volatility is to reduce the number of positions entered, if you are trading, because you do not know where the market is actually going. Yeah. And of course, if you have already positions trading positions, and of course if you are long, then it would be very painful to see that your gains or your profits getting wiped out. Okay, and of course you want the market to turn, and whether the market is actually going to turn or not, again, we do not really know, but there are some indicators which we can actually use to see if there are possibilities that the downtrend is what is that is already at its bottom, or it can actually go down further. And in fact, if you look at the what is that the futures today, right? Uh, Early in the morning, the futures was up 20 over points, and right now the futures is actually down by 50. S&P futures, right? It's actually down by 50 points. Again, similar to yesterday, possible market opening, gapping down, and then later while you are sleeping, the happy face comes out. Okay, so this is actually also possible to happen today. And of course, if that happens, what can you do? What can you do, and how can you actually benefit with such kind of volatile market? Yep. Of course, every crisis, there are also opportunities, and these are the opportunities which we would actually want to catch on as investor or traders. Okay. So again, the what is that? Nasdaq is also similar situation, right? Of course, the Nasdaq decline is actually even more, right? I mean, so far it has actually retraced about 18%, and of course, if it continues to drop more than 20%, then it is not going to be a good sign, because that of course will scare off a lot of people from the market. Scare off a lot of people from the market. 1 point equals to what? Okay, is the what I meant is the uh, the price, the S&P price. 1 point is equivalent to $1 movement in the share price or the index price. Yeah. Okay. So Nasdaq a little worse than S&P 500. It went down by 18%, as I said, and of course, if you can actually see the volatility yesterday, right? The intraday movement for Nasdaq is also quite big. Yeah, quite big. And of course, this morning, of course, a lot of shares have actually turned green in all markets. All markets, it has actually turned green. Whether it will continue to stay green or not, I mean, is yet to be seen. I mean, I think right now, what is happening is that the market makers be might try to scare a lot of people out lah. Scare a lot of people out from the market. I mean, basically, these are what we call the weak hands. The weak hands, which means that the people who don't have a strong heart lah. Who don't have a strong heart. I mean, if you have actually say buy a stock at a certain price here. And of course, if you see a stock coming down, right? Even though it's a very strong stocks, there's no problem with the business. The stock's price actually comes down, right? Then you actually get scared. And then these weak hands will actually sell off their positions. And of course, the other type of people who might be affected are actually people who actually borrow money, who take margins to actually trade the stock market. And of course, if you borrow money and take margins to trade the stock market, right? And once it actually comes to your margin call limits, right? That means the price has actually dropped to a certain value where the stockbroker will actually start to initiate margin call. Your broker account might not have sufficient funds or whatnot. They might already start to initiate margin calls on your account, and you need to actually top up cash or liquidate your positions. And of course, these kind of the things are actually situations where it will even make the stock prices drop even more, because a lot of people are actually trading the markets on borrowings. So of course, once all these people shares, right, shares or in the market gets out of the market, that means basically there is actually no more selling pressure, in the market. Then of course that is the time where the market would have actually catch the bottom, and the reversal would actually tend to come after that. Yeah. So these are the things that is actually what happening right now. And whether we are actually at the bottom, I am not certain. I'm not certain. From of course, if the market opens bullish today, if the market actually open bullish today, then possibly I would say maybe we are actually at the bottom. But it doesn't look like it, because market again uh, looks like it is actually going to open up red. Okay, open up red on the start of the trading day. Okay. Okay, so of course, I will also go through how to actually manage some of these positions. Winnie, is you are actually talking about buy S&P 500 to keep. Okay, buy fraction shares using cash. Okay, fine. Okay, yes, of course. One of the things which we are actually doing right now, we can actually do now, is actually to put in add in positions for our long-term investments. As I said, the market will actually bottom out when there are no more sellers. That means the selling is actually less. And if you look at what these analysts have actually written, they actually took out some data from yesterday, right? They said that retail traders bailed on market right before stocks rebounded, which was actually yesterday. That all the people saw that the market went down by 5% in a day, which scared the out of them, and of course they actually threw off or sold off whatever positions they have, to avoid that the market going into a deeper correction. Okay, so these are again opportunities for us to actually add on positions. And of course, when how to say, when people actually are in a panic mode, right, of course us traders and investors find opportunities. Whether that opportunity is the right time, we do not know. You see, we do not know, because you will not catch it just right all the way at the bottom. You will not be able to catch. I mean, if you really catch it all the way to the last cent before it actually tips up, right, then it will actually be a great achievement. But most of us would not be able to actually catch the bottom. So what do we do if we cannot actually catch the bottom? We look at actually what indicators are there, and when do we add positions. We will also look at certain indicators. Okay, so again, whether you will be a trader sitting and crying because your portfolio is in the red, and you actually sold it nearing to the bottom before a reversal, or whether you are actually a trader or an investor who actually come in when there is actually a retracement, to add into the trading opportunity for your stocks portfolio or your short-term trading portfolio. Yeah, so you can either be this guy or this guy. I hope that you are the happy guy who have actually made a good trade, in your account, right? Yeah. So we are trying to actually become this happy guy who have actually made a good decisions in the stock market and during this year of the tiger. Okay, as I said, fear is actually one thing which actually drive people to actually make the wrong decisions. Okay, so when you actually trade the stock market, or when you actually even invest, you actually have to control fear. You actually have to control fear. Of course, if this what is that market falls by 5% in a day, I'm also scared, man. But I need to control fear, right? I need to control fear so that I don't make the wrong decisions at the wrong time. Yeah. So fear is actually one thing, and of course, the stock market is actually also very emotional, very emotional, and it actually how to say, behave according to people's emotion, according to people's emotion. Okay, when things are not good, when people have very their emotion tend to be irrational. Okay, when it tends to be irrational means that they will just cut loss and they will just sell their shares, even though uh, the stocks which they hold, fundamentally there's actually no change in the business, or it's there's no change. It's just because of the overall market decline, the share price actually came down. Yeah. Okay, so one of the things which we actually look at is this thing what we call VIX volatility index. Okay, VIX volatility index is actually what we call also a fear meter, and for those people who is actually students of my style work, right? I have actually written already on this VIX volatility index in the newsletter which we issued maybe about 6 weeks ago. 5 6 weeks ago, we issued a weekly newsletter, which basically also talks about educating traders and also investors on things that you need to actually learn from the stock market. And VIX is one of the things which we have covered. Okay, so it actually measures the fear in the market. Okay, and of course, when VIX is high, right? When VIX is high, the fear means that the fear level is actually high, and generally VIX at the level nowadays, VIX at the level of 20 is actually normal. Okay, and of course for the past many months, the normal average level VIX, which stands during times which the market is actually not volatile, is actually sitting at 15. It's actually sitting at average level of 15. So between 15 and 20, we are talking about normal. I mean, nothing great happening. Market is just doing what it is doing. I mean, we are just trading normally. Yeah. Okay. And of course, when VIX actually goes to 30, when VIX actually goes to 30, um, yeah, Winnie, you can actually see VIX in TradingView. Yes, I will also show you VIX in TradingView. Yeah. Uh, you can actually just type VIX on TradingView. You should show pull out VIX. Okay, when VIX is actually going to 30, that means the market is actually nervous. Okay, and market is nervous when there is actually a correction coming. That means the market is dropping. A lot of stock share price or whatever is actually dropping. So you will see a bit of nervousness in the market, and of course, when people are nervous, you see the fear factor comes in. When the fear factor comes in, then you see the emotion comes in, and they start to actually take uh, um, irrational position, because they might want to either protect their profits, or they might see that the market might drop even more. They start to actually sell. And of course, not all situations, when VIX goes to 30, it is actually going to be a strong a strong pullback, because for the past 12 months, there are only certain times when the market retraces, VIX has actually reached 30, which I also show you later on. Yeah, so panic selling comes in starting at when VIX actually turns 30. Okay, and when VIX turns 40, okay, this is what we call panic. People start to panic. Okay, and I will also show you that only during certain times VIX has actually turned 40. And in fact, what happened yesterday is that VIX has actually turned 40. 40. And I'll show you how long VIX has actually turned 40. And then lastly, right, when and then of course when VIX turns uh, what is that 40, right, we basically are talking about starting to enter a market correction. Yeah, market correction, which is more than 10%, 10% or more in market decline. Yeah, and of course and then when VIX actually turns 50, and VIX actually turns 50, that is the time that where we actually go into a full corrections. And then the what is that, the what is, I can't see this, Let me see what they are right here. It turns into a full correction, and basically what happens is that stocks will be cheap. Okay, stocks will be cheap, and then investors can actually pile on to their favorite stocks. Okay, favorite stocks will be cheap, and investors can actually pile on to their traded stocks as favorite stocks when VIX actually turns 50. But bear in mind, very rare that the VIX actually turn 50. Okay, so far 30 is the norm, 40 only not so often, which I can also share with you when did it actually turn this way here. Okay, let me see. Do you see? No, I think I shared the wrong one. Let's see. This one? No. Okay, let's share again. Stop share screen. Okay, all right. So we look here. Okay, VIX. No, not this VIX. Where's this VIX? Is this VIX? Okay. So this is actually VIX, right? Just type VIX. This is actually VIX. And let me show you when what happened yesterday first. Yesterday first. Okay, yesterday. This is 24th. 24th is yesterday, right? 24th, 22nd. Okay, so actually this was VIX, yesterday's VIX. Okay, VIX actually closed Friday at 2873, around 2873. This was last Friday VIX. Yeah, this was last Friday VIX. Let me just check this out. Okay, so this was last Friday VIX at about 28, about 28 or 29 here. Okay, we close here. And of course, when the market opened yesterday, VIX actually dropped to about, went up. When it dropped to about 28, 24th, yeah. It was actually at 28 initially when the market opened, and then it's like started to creep up. It started to actually creep up yesterday. Okay, it started to creep up yesterday, and of course it went all the way to here first, at it went all the way to high of about 37. That means it was below 30, and then it went to 37. Like I said earlier, when 30, you see that market starts to panic. Okay, and when it is actually at 37, okay, more panic will come, and it actually went up to a high of about close to 39. Yeah, below 40 still, close to 39. Okay, when it actually reached this level, I think a lot of people are and then you remember just now we were talking about the market actually went almost to about 170 points down, right? 170 points down. I think this was the tipping tipping point for people, where they actually start to panic, starting when it was actually above 30 going up. Yeah, people start to panic, and people start to dump shares. And the same thing where the article which I actually shown you, that they said that the retail investors dump all their shares, started to actually dump all their shares before the market bottom yesterday. I'm not saying that it has already bottom, only yesterday. Before the market bottom, when the market bottom, the investors dump a lot of shares. Okay, because they panic that their positions will actually go down further. And of course, the other thing is that they said, okay, why don't I dump the shares right now? And if it goes further, I want to buy it back. But So maybe they can buy it back. Of course, there are also possibility that, I mean, it is a bottom and the price can actually go up after that. So of course, after that, the VIX has actually retraced down. Yeah, retraced down. And of course, when it actually retraced down all the way to about 29 and actually close to about 33. Okay. No, VIX is actually not particularly tied into S&P 500. 500 is basically generally the fear index for the market, the entire market. Yeah, it is not tied into any index per se. Yeah, so that is VIX. So it's actually a fear indicator for the stock market. So you just put it simple, it measures fear in the market. Okay, when things are volatile, you see VIX tends to spike. And of course, if you go back to history, right, if you go back to history, uh let's see here. Okay, if you go back to history, right, let's put here, and you put indicators, compare VIX, VIX, compare VIX. Okay, so if you go back to history, right, you look at what has actually happened during the past many past year lah. Basically, you just talk about the past year, right? So of course, in 2021, right, you will actually see that during retracements, right, during retracements, like in this year, the January and February retracement, right, you can actually see VIX also spike up to about 37 or 38. Yeah, slightly below 38. VIX has actually one spike here. And then, of course, in the second retracement coming February, VIX has actually also spiked, but below what is that? Below 30 lah. Yeah. So this was one, and then when the market came down here, this was another spike, and then the markets came down here. This was another small spike, and then the bigger one in December. Yeah, there was another spike, going higher to above 30. And of course, this time round, it is actually again one spike here. Of course, you won't see the VIX to be above 40 here, yeah, because this is the daily VIX. And of course, the time where actually VIX actually went above was actually on the other what is that, the 5 minutes charts, which I used. Yeah, so VIX was actually at the level of about 30 here, was actually at the level of 30 here. So when VIX spikes, right, of course, these are the time where we can actually see that there's fear in the market. And of course, when there are fear in the market, that goes also for opportunities for us to actually enter the market. Okay, enter the market because of the overall market retracements, which provides us entry opportunities to actually invest in fundamentally good stocks. Fundamentally good stocks. Yeah. And of course, if you are a trader, for me, because the volatility is still so high, I'm not going to actually add on any directional positions at the moment, especially long positions. Even if you're talking about shorting the market, right? Even if you're talking about shorting the markets, if you actually short the market before you sleep, right? And then when you wake up and you sleep very happy because you short the market, you see the thing going down. But when you wake up, you can see that the market has actually went on a 360-degree turn, U-turn. It was actually up. So trading wise, a bit volatile. So I reduced the number of trades, whereas now it's more of investing time. It's more of an investing time, because you can actually put you can actually be two sides. Like you can be a trader at the same time, also investor. So now focus more on investing. Yeah, focus more on investing, trying to actually add on opportunities on good stocks. Okay. Really, we wanted to actually show the VIX indicator again. Okay. This is let me share the screen again. Uh, okay, so I will just remove this first because I add two parameter here. Okay, let's put a new one. You just type VIX here, VIX, yeah, volatility S&P 500 here, right? Yeah. So you actually look at this volatility index. This is actually the VIX. Yeah. Currently is at 32, and this is 5 minutes lah. This is 5 minutes. Don't do. Normally we'll just look at the daily one, the daily one. Yeah, daily one, where you see a huge spike here, spike up here, all the way up to close to 40. Only for a while. Only for a while. Yeah. Okay. Okay, so again, use VIX as an indicator when you actually want to time in your entries to the market, time in your entries to the market. But of course, you also need to actually look at the stock and the positions which you are actually entering, whether it is actually at support levels based on historical, or and also whether it is undervalued. Yeah, undervalued. Okay, so I mean, I will actually show you some examples. I will actually show you some examples of the stocks which I have actually also added positions during this last week, and also even yesterday itself. Some positions into these stocks. Okay. Uh, and these are part of my long-term portfolio. Of course, on the US side, right? On the US side, one of the stocks which I have actually also spoken about this even as at even last week itself on Trader Stock. I've already spoken about stocks like Microsoft, okay, and also Adobe, that I am actually already eyeing to add on positions to these stocks if it actually retraces lower. If it actually retraces lower, and in fact, yesterday itself was yesterday and Friday itself. There were opportunities for you to actually add on to Microsoft below $300. Below $300, yeah. And let's see Microsoft, right? Okay. Okay, so Microsoft, right? I mean, this is actually Microsoft, all right. Okay, so if you look at Microsoft, right? Let's take this out. Okay, you see that this candle here, where actually yesterday itself, Microsoft dropped all the way down to about $275. Okay, while you are sleeping. Okay, while you are sleeping. So for those people who have actually put in a limit order, yeah, to buy Microsoft, that would be actually a great entry. Yeah. So of course, I think last week I spoke about putting in a few levels of entry. That means when you actually enter, because we do not know when the retracement, the market retracement, is actually going to bottom out. So when we actually want to add in positions, we also need to how to say, average it, so-called average it down. I mean, if the market continue to go down, then we will start to actually, how to say, we will actually start to average down the price. And the level which I actually mentioned last week was $300 itself, right? $300 itself was already one potential entry point which I was eyeing at 300, which was somewhere around here. Yeah. And I think this was achieved already last Friday. This was already triggered last Friday. One position where where I entered into Microsoft last Friday here. And of course, yesterday itself, it has actually given another opportunity to do it at lower. But of course, I did not put in anything at 227 over yet. I mean, hopefully today it will give another opportunity for us to actually add on more. This is the daily candle. And then of course the let me see, the weekly for Microsoft is here. Yeah, you can see that on the weekly candle, right? Weekly candle, then of course the potential points would be slightly below this. What is this? This is actually the 150, no, 50 moving average on weekly. 50 moving average on weekly. Yeah. Uh, there are times where it drops below 50. So February was one, and now it's actually another opportunity that it has actually dropped to this level. Yeah. And of course, if you look at Microsoft, right? If you look at Microsoft in 2021 itself, right? In 2021 itself, uh, it has actually consistently gone up by, to the highest is about, is it 20, am I right? 64% so much. Yeah, 64%. Yeah, 64%. Oh, that's a lot, right? I mean, you see, in 4th of January, it was actually only trading about 212. Yeah. And then it went all the way to about close to 350. I mean, in a stock that goes up by 50% is already very great. Good. 20% is also already very good. Okay. But stocks like Microsoft is actually quite strong, a strong company. And of course, if provided opportunity for you to actually enter on a longer term basis, then of course this is actually a good stock for you to add on to your portfolio. Really, just now the you are confused about the yellow line I added. Actually, the yellow line is actually I added another chart on top of the current chart, the VIX. You see, I added to compare symbol. When you actually want to do some analysis on this trading view, you can actually benchmark your stocks against other stocks. For example, this is Microsoft, right? I can actually put it against VIX. I can also put it against Facebook, yeah, to actually see the trends and all, how it has actually performed. This is one feature which you can actually use on this. You just need to click on compare here, compare plus, then you can put in whatever things you want to compare. Just now I was actually comparing VIX against S&P. Yeah. Why I actually wanted to compare is I wanted to actually see when there is actually a spike in VIX, right? A spike in VIX, what will actually happen to the stock or the index? Yeah, spike in VIX, stock index drops. Spike in VIX, stock drop. Spike in VIX, stock drop. Yeah. Okay. So this was what I actually wanted to show. Yeah. Okay, so Microsoft is one which I have started to add on some positions, and of course, if it goes down further, then I can actually add in more positions on on this on this fixed on this Microsoft. Okay, then the other one which I actually spoken about was this Adobe. Uh, okay, Adobe is actually a company. I mean, a software company which basically uses this PDF. I mean, PDF is one of the things which you actually use from this company. Of course, there is actually the free version, and of course, there is also the paid versions. I mean, these are the more commonly known software Adobe have. And of course, if you are a graphic designer, then of course, Adobe is again another software which is actually very popular in the arts and design industry. Yeah, Adobe, Adobe. Okay, A Adobe. Why am I typing it wrong? Okay, Adobe. Okay, Adobe. Okay, so okay, Adobe. As you can see, also Adobe has actually run up in 2021, right? It has actually run up also quite strongly, and now it is actually giving you an opportunity to actually add on positions. It's actually coming back to the price where it was somewhere in the end of towards the last quarter of last year. Yeah, if you can actually see the prices, right? Yeah, it's actually coming back to a level where it was somewhere in October 2020. It went all the way up to about 680 before it retraced about 20 over percent down. Yeah, and currently it is actually today 519. Yeah, 519 yesterday. Today market is down. Is going to 512. 512. Yeah, 512. Okay. uh okay, so Adobe itself last week I did mention that the positions basically at about 500, I would actually add on some of my portfolio positions at 500 itself. Yeah, so of course that triggered some buy-ins, that already triggered some buy-ins for my portfolio. And of course, if Adobe go down further uh, can go down further, then of course here is about 500 here, right? Yeah, so of course, if it can go down further way down to this level, which is about 450, even better. Even better. Yeah, but I mean, as long as you find a good entry point, you can already start to add in some positions. And of course, we're not talking about what is that, buying today and selling tomorrow kind of thing. We are talking about buying today and keeping it for a midterm, 3 5 even 10 years kind of investment, where you start to average your cost when it is actually on trending up. Yeah, trending up. So Adobe, yeah, Adobe is one, and of course the weekly. This is the weekly charts. The daily charts itself, you see, it has already broken a lot of supports on the moving averages. Yeah, so on the weekly charts, yeah, it has also broken off the 50 moving average. Yeah, and it seems that if market continues to come down, it might continue to drop. It might continue to drop to 450. Might be another level where I will add in another position. Yeah, at 450. You see that here it is actually trending sideways, a lot of volume at this level, right? Yeah. So if it can come down here that's a good entry. Not a lot of times, I mean, that it drops below this 50 moving average on weekly. Not a lot of times, yeah. And of course, if you find opportunities, yeah, that is the time where we will do our investment trades, yeah, investment trades. So this is what is that? Okay, this is Adobe. Earlier, I was actually mentioning on Google. Google is another one also, yeah. Google. Okay, Google is actually now sitting on weekly 50, yeah, weekly 50. And currently it is at about about 2,600, 2,006 lah, yeah. So of course, support levels, yeah, you can actually look at support levels, 2006. In fact, I have already also added even when it was 2007 earlier, 2007, yeah. Yeah, but of course, if you do not have any positions on Google, yeah, that is the time where I mean, you can actually evaluate whether this is the good price for you to actually enter, or if you want to wait for VIX to spike up again tonight, maybe you can even place an order at a lower threshold, lower threshold. But of course, it may not necessarily that it will go there. You may miss the opportunity. So that's why we split our buy-ins into a few, yeah. And of course, if we get in and if it reverses, then that's already one position where we already have in our portfolio. If it doesn't go lower, then it's okay. We already at least have one position in. Okay. And of course, Winnie, you had another question. VIX, is it tradable on options? Yes, VIX is actually on options. uh, there is actually fixed options. You can actually also trade it, but of course, I don't trade so much VIX as a directional, that means as a directional trade kind of thing, yeah, because I only use VIX as a hedging instrument, yeah. That means basically I use VIX to hedge the market when it actually drops. And of course, how to say, you need to have a very so-called big movement in VIX in order to benefit in certain option structures lah, which I won't want to go in today lah, yeah. Okay, maybe later next time we can actually talk about how to hedge VIX using option structures like back ratios and all this. Yeah. Okay, so these are the US stocks that I mean, I have actually found opportunity to actually enter during these retracements. And of course, on the other side, on the Hong Kong market, right, the Hong Kong or the China market, right, and of course, if you guys know the sector in the tech sector in China especially has actually had a very huge retracement. And of course, one of the very fundamentally strong stocks which was beaten down during this retracement, right, was actually Tencent Holdings, yeah, Tencent Holdings. Because of the government regulations and all these kind of things, it has actually dropped by almost close to 45 or 50%. Yeah, 40 over percent. It has actually dropped from its high. And of course, during the past how long? Past few months, right? Since August, these stocks has actually been trading in range between this high of 520 to a low of about slightly above 400 lah, between 400 to 500. Yeah, it's actually trading sideways. And of course, if there are actually opportunities again, if you do not have this can be also a potential for longer term investment. I mean, of course, the hope for the overall China sector is that when the US is down, everybody is trying to find other places to actually invest. And I mean, one of the so-called other worst hit market last year was actually on the China tech, right? And on the China tech, and if people is already hit by all the US tech, right? US tech, which has actually gone down by 50%. The years before, it actually went up by 60, 50, 100, or even 200% on the US techs. And when China tech actually went down 50, a lot of people actually dump and sold off on the China side, and possibly continue to invest on the US tech, and now they actually get hit. Yeah. So again, all these fund managers will try to actually find other places to invest their funds, and of course, although risky on regulation side, this is one potential, because it has already gone down by 50% since last year. Of course, the chances of a rebound would be higher. Yeah. So Tencent is one, and of course, if you do not want to, if I mean, some of the positions which I had was actually carried on also from the past, and of course, the China side, I am still trying to go in through a little mix of trading and also investment. And of course, when we try to actually mix this, right, one of the strategies which we actually do is actually selling of puts. And of course, when you sell puts, right, you need to actually have this cash available to actually buy up the share in case your strike gets breached. But of course, during times where things are still uncertain, and to actually provide opportunity to actually how to say, reduce your cost basis, right? That you don't need to actually immediately sink in to buy the stock and hold it immediately. You can sell some puts to generate some premiums, and of course, if it comes down and if you need to pick up the stock, you just pick up the stock, you average your cost down, and then if you do not need to pick up the stocks, and if it is moving sideways, right, the even better, you can continue to accumulate premiums until how to say, it actually subsidizes the purchases of these kind of stocks when you actually want to buy it or take it up. Yeah. So 10 cents. And the other one is actually what is that? JD. Okay, JD again. It is actually a very volatile stocks, but again, I would tend to mix this a bit more on trading for the time being, trading of JD.com for the time being, and of course, whenever there are opportunities for it to actually go to a level of about below 70, when it actually goes to a level of below 70, that's the time where I actually start to look into opportunities to actually trade it up. Yeah, trade it up. Yeah, because in the past months, it rarely goes down to above below 70, and of course, now again, you see the opportunity that it is actually trading at 70 already. Yeah. So JD more on trading opportunities. Yeah. JD.com. And of course, the other one is Hong Kong Exchange. Hong Kong Exchange is again one of my favorite so-called candidate for the US market lah. Yeah. Sorry, the Hong Kong market. And of course, in the past months, it has been trading at a range between of about 440 to a high of 520. Rarely goes so high. Like the only time it was mid of last year, but after that it was hovering around 420, 450 kind of thing. Yeah, 400 over dollars. And of course, again, this stock, most of the time I would actually do again cash secured puts on this Hong Kong exchange, cash secured puts. And of course, I have already landed up with some assigned positions for this Hong Kong exchange, then I would actually also do covered calls on the stock to actually just get the premiums, to actually get premiums while it's actually trading sideways. So both mix of trading and investment. If it actually goes up, then of course as an investment, the portfolio actually goes more. While it is going sideways, then of course that's the time where we generate premium out of stocks like this. Yeah. So again, two different sides. The US side, the Hong Kong side, the trading and investment pattern can be different. And of course, for you guys here, try to actually have a few stocks which you are actually a bit more familiar to it, and also to actually how to say identify them lah, identify a bucket of stocks, to trade or to invest, and identify buy-in points, or also potential trade-in points. Yeah. And okay, again, as I said, Winnie, you have a good point here. Of course, the China government policy is actually uncertain. Of course, this is actually always a risk. I mean, whether it is actually China, US, everywhere, there is always risk to something. There's always risk to something, and you have to actually also be comfortable with the risk which you are actually taking. And again, one of the points which I've also covered in the previous show is that whenever you trade or whenever you invest, you also have to have some form of diversification. Of course, we are not asking you to actually put in a big chunk of funds into the China portfolio, or any particular stock or any particular sector. Okay, you need to actually see which are the so-called sector, which are the markets, which are the countries that can actually potentially give you the highest risk, which highest return, I mean potentially a good return with the kind of risk which you are actually taking. And of course, for the China side, yes, how to say, it is cheap, but you can continue to become cheaper, right? It can continue to become cheaper. That's why how to say, look at what you are comfortable with, and look at what type of structures which you actually want to generate returns with. Like for example, if I'm not comfortable of say buying into JD.com or even Hong Kong Exchange right now, right? Okay, so I will actually do trading on it until I see how to say, until I actually see change in their policy, or things actually starts to improve. But I mean, before that happens, right? I mean, no point for me to wait and do nothing, right? No point for me to wait and do nothing. So while things are still how to say, are not moving everywhere, and how to say, things can continue to be uncertain, I start to continue to generate income out of options trade to reduce my cost base, or in case I mean, I'm landed with the opportunity where I was assigned the stock, I have no choice but to buy it in. Okay, that can also be a potential for me. Yeah, so that's how I actually look at it lah. I mean, that the sectors which you go in, assess the risk and assess what is the comfort level which you have. Yeah. Okay, so of course, again, tiger year, good and bad. I think both will come lah. I mean, we cannot control what the tiger brings us, but of course, with knowledge and information, we can actually put ourselves in a better position to capitalize on the opportunities. Okay, Winnie, you're talking about Yamsi, right? Again, yes, Yamsi. Personally, I have also added in positions into Yum China. Um, at about uh 40 40 45. Yeah, 45. I think I actually put in more positions. I think it's currently trading at around 40 45 plus, 45 plus. And of course yesterday I think I picked up some Yamsi, if not mistaken, when it was actually 45. I've not checked, but I think I've placed some limit orders at that buy-in point. Of course, if you look at Yamsi, it is actually coming down. I mean, it is not to say that Yamsi is actually on what is that, on uptrend. Actually, it has actually came down from the highs of about 60 over dollars, 60 over dollars. Yeah, in fact, some of the positions which I was holding to Yamsi was even at about 60 over dollars, all the way down to 40 over dollars, even a better buy for me. Yeah, because I love KFC. So if you look, since I love KFC, right? Why don't I own part of KFC and enjoy their chicken? Yeah. So Yamsi, yes. I mean, personally, I've added in some positions on Yamsi. So again, these stocks, this kind of stocks, not a short term kind of thing. I mean, don't expect that you buy at the current level. Within the next 1 2 months, you will actually see a 10 20 30% gain. Yeah, but of course, on a longer term basis, and if you expand the so-called what is that, the price trend charts in the next 5 10 years, right, you will see that these are the good, probably the good buy-in points for you to actually enter into the stock. Yeah, yeah. Okay, Yamc got support level. I did not see. Let's see. Okay, before I end, I just check this thing here. Yamc got, what's the price chart like? Yamc. Yamc. YUMC. Okay. Okay, Yamc. Weekly candles. Okay, I mean, it has already gone down to 200 moving. This is 250 actually. Yeah, it's actually gone down all the way here. Okay, I mean, of course, if you're waiting for levels of support, I mean, this level 38, I don't know whether it will actually come to this level again, 38, 39. Yeah, I mean, you can, that's why I said, we don't know. So when we don't know, basically, when you feel that the price is already right, I mean, you can already add in uh, at the current levels. You see, I mean, basically, this is if you look at the daily charts is already gone all the way back to here. Yeah. So I would say around this level, you can see that it congregate around this level, right? Around this level here. Yeah. So to wait for it to come down to 38, which is a COVID crash, right? COVID crash. I don't know, maybe not possible unless another black swan event comes in. Yeah. But at current levels, between say 45, 40 to 45, I think I'm comfortable to um, get in. Yeah, get in. Okay, so great. I mean, it's okay. So it's great session today. Hope that you guys have actually taken something off to see how you can actually trade the markets, to use fix as your friend, and not to panic, not to make fear, and getting emotional about the stock market and making irrational decisions. Okay, so wishing you guys a very happy Chinese New Year, and hope that you guys have a prosperous Tiger New Year, and roaring what is that, roaring pocket. Roaring pocket means a lot of money lah, yeah. So wish you happy holidays and happy Chinese New Year. So take care, and I will see you again next week. Maybe we have a shorter chat. Festivities, of course, we can have a shorter chat just to catch up on the market situation next week. Yeah. So I will see you again next week. Happy Chinese New Year. Take care. Bye bye.